Hi, it's me. This is going to be a quick video where I want to talk about the mindset of the wealthy. If you have been around here for some time, you already know that this is one of my favorite topics, because I believe that being rich is more than just having a lot of money. Being rich also means having a certain mindset, the kind of mindset that helps you become wealthy and also keeps you wealthy. And in today's video, I am going to be sharing with you 7 things that only the wealthy understand when it comes to crypto. Let's get into it. Point no. 1. Wealthy think long-term, not short-term. If there is one thing that poor and middle-class people do all the time, is they are constantly looking for ways to make a quick buck or looking for quick profits. And I mean, who doesn't like making money? Who doesn't like making profits? But if you're doing it all the time, then there might be an underlying issue. So yeah, sure, we all look for profits. We all look for ways to increase our gains. But at least as crypto investors, it should come after saying, okay, what is this project trying to solve? What problem does this project actually solve? And can this project stand the test of time? Because those who think long-term and build products and services that help solve problems for people over decades or even centuries end up creating generational wealth for themselves and their families. I think what really gets people is when they see somebody else make a ton of money. They feel FOMO. They feel that urge to want to go out and make that money as well. But if you are truly seeing the bigger picture, you will realize that your reaction shouldn't be to try to copy what someone else is doing. Instead, it should be to find something that aligns with your vision, something that you believe in so strongly that you can hold through any sort of price volatility and make that investment work for you. Point number 2. Patience equals superpower in investing. In order to think long-term, you must first have patience. I would say that patience is the most important quality you need in order to succeed in investing. Yes, that means holding through the bear market, and yes, it means buying and selling at opportune moments when it makes sense. But sometimes that means waiting years to find the right opportunity. Remember that good things take time. Great companies didn't get built overnight. They took years of hard work and dedication. Successful relationships didn't get built in a day. They were cultivated over months and years. And your success as an investor isn't going to be any different. You cannot expect to get rich quick in crypto or in anything else in life unless you win the lottery or get lucky, which, let's be honest, those things are pretty much never going to happen. So don't wait for luck to change your financial situation. Instead, focus on building your patience and use that superpower to make smart investment decisions. Point number 3. Don't focus on the price. Now, this is something that many new investors fail to understand. When you buy a stock in the stock market, the price of that stock does not matter. Why? Because the price of that stock represents the value of that company. And if you are buying that stock at a lower price, you are getting more value for your money. Same thing applies to crypto. If you are buying Bitcoin, the price of Bitcoin does not matter because the price of Bitcoin represents the value of that asset. And if you are buying Bitcoin at a lower price, you are getting more value for your money. Same thing goes for any other crypto asset. The price of that asset represents the value of that asset. And if you are buying that asset at a lower price, you are getting more value for your money. Now, of course, it is important to stay up to date with what is going on in the markets, but it is even more important not to make decisions based on emotions. So what do I mean by that? Well, for example, if you are buying Bitcoin because the price is low, you are letting fear dictate your actions. If you are selling Bitcoin because the price is high, you are letting greed dictate your actions. Instead, focus on the fundamentals of the projects you are investing in and make decisions based on logic rather than emotion. No, for diversification is good, but don't lose conviction. Most people think that in order to invest wisely, you need to diversify your portfolio across multiple projects and multiple chains. And yes, diversification is important, but it is not everything. There are many wealthy people out there who have made fortunes by putting all their eggs in one basket. It is called conviction. Conviction is the key to building wealth in crypto. You cannot be afraid to go all in on a project or a protocol that you believe in. Of course, you need to do your research and you need to be confident in your investment thesis. But once you have done that, you need to be willing to ride the waves of volatility that come with investing in new and innovative technologies. Many people lose money in crypto because they try to play both sides of the market. They buy into a project and then they sell when the price goes down, only to buy back in when the price goes up again. This is called a lack of conviction. If you want to build wealth in crypto, you need to learn how to hold through the volatility and trust in the long-term growth potential of the projects you are invested in. Point no. 5. Volatility equals opportunity. As I mentioned earlier, one of the biggest mistakes that new investors make is that they try to time the market. They buy into a project because the price is low, and then they sell when the price goes up, only to buy back in when the price goes down again. This is called a lack of conviction. If you want to build wealth in crypto, you need to learn how to hold through the volatility and trust in the long-term growth potential of the projects you are invested in. Volatility is a fact of life in the crypto markets. The prices of digital assets can go up or down by double digits in a single day. This can be scary for new investors, but it also presents an opportunity to make big profits if you know how to take advantage of it. When the price of an asset goes down, it creates what is called a buying opportunity. This is when you can buy more of that asset for the same amount of money. For example, let's say you have $1,000 and you want to buy Bitcoin. If the price of Bitcoin is $20,000, you will be able to buy 0.05 Bitcoin. However, if the price of Bitcoin drops to $10,000, you will now be able to buy 0.1 Bitcoin with the same amount of money. This is a great deal, and it allows you to get more Bitcoin for your money. Now, of course, you need to be careful when taking advantage of a buying opportunity. Make sure that you are still comfortable with the investment thesis of the project you are buying and that you have a plan in place for when the price goes back up. But if you do this correctly, you can make a lot of money in crypto. No 6. Think generationally, not just for today. If you want to be like the wealthy, you need to start thinking like them. And one way to do that is to start thinking long term. Stop thinking about what you can make today, or this week, or even this year. Start thinking about what you can make over the next 5 or 10 years. When you start thinking like this, you will be less likely to make rash decisions based on short-term price movements. Instead, you will be able to focus on the long-term growth potential of the projects you are invested in. This is not to say that you should never take profits, or that you should never sell a position. What I am saying is that you need to be willing to hold through the volatility and trust in the long-term growth potential of the projects you are invested in. No, a long-term mindset beats a short-term speculation. When it comes to building wealth in crypto, there are two mindsets that you can adopt. The first is a long-term mindset, and the second is a short-term speculation mindset. Those who adopt a long-term mindset are the ones who end up building wealth, because they are able to hold through the volatility and trust in the long-term growth potential of the projects they are invested in. Those who adopt a short-term speculation mindset, on the other hand, are the ones who end up losing money because they are constantly trying to time the market. They buy into a project because the price is low, and then they sell when the price goes up, only to buy back in when the price goes down again. This is a recipe for disaster, and it is something that you need to avoid if you want to build wealth in crypto. The bottom line is simple. If you want to be like the wealthy, you need to start thinking like them. And one way to do that is to start thinking long-term. Stop thinking about what you can make today, or this week, or even this year. Start thinking about what you can make over the next 5 or 10 years. When you start thinking like this, you will be less likely to make rash decisions based on short-term price movements. Instead, you will be able to focus on the long-term growth potential of the projects you are invested in. This is a powerful mindset that can help you build wealth in crypto, but it is up to you to decide whether or not you want to adopt it. So what do you think? Are you ready to start thinking like the wealthy? Let me know your thoughts in the comments below. Thank you for watching, and until next time.